This episode is brought to you by Audit Shield, the service that protects CPA firms when the CRA comes calling. Audit Shield ensures every hour you spend responding to audits or reviews is fully covered.
Welcome to our AJAG PD Pod, the place for discussion, debate, and learning about all things accounting. Our hosts, Ivan Tabak, Jonathan Tucker, are CPAs that have been in practice for more than 3 decades. Together, they bring varying experience and viewpoints to the table, not to mention a little humor, too. Join us as we talk through current issues and hot topics, tap into expert guest insights, and enjoy the odd walk down AJAG memory lane. Before we begin today's podcast, please note, although the educational material within the podcast has been carefully prepared, none of the persons involved in the preparation of the material accepts any legal responsibility for its contents or for any consequences arising from its use. As well, the podcast material and the references contained therein may reflect laws and practices that are subject to change. Advice regarding a particular fact or situation should always be reviewed by a qualified professional. This podcast is produced and distributed by AJAG Professional Development. For more information about AJAG or any of its offerings, please visit ajag.ca.
Welcome to Season 3, Episode 2 of the AJAG PD Pod. I'm Ivan Tabak.
And I'm Jonathan Tucker.
And today we're pleased to be joined by Guy Vadish, founder and CEO of Artiffex. Welcome, Guy.
Thank you. I'm happy to be here.
Great to have you.
So, why don't you tell us what Artiffex is?
Yeah, so Artiffex was launched 10 years ago. Our mission was to transform a certain segment of the accounting world called investment bookkeeping. And to make a long story short, we built a solution to a long-standing problem, which is to automate the investment bookkeeping process. So at the highest level, that's what we do. Our clients are accounting firms and family offices, accountants in public practice, and that's what we do.
How did you land on that? Why did that issue come up?
Yeah, so me as an entrepreneur, I've spent my life exclusively attached to projects which transform the way we work or live. So I've always been drawn to that. So if you look at what I've done historically, that's kind of what I like. I like the idea of going from 0 to 1. There's a problem that's actually going to affect the way people work, and that drives me. I mean, as an entrepreneur, obviously building a business and making revenues is a goal, but on a personal level, I want to be bringing a solution that actually changes the way people work. So we're a spinoff of another company that's been around since 1999. That entrepreneur had approached me a few times along the way with some side projects that he had on the go. And when he presented this one to me, I kind of did my due diligence and I looked at the marketplace, and there was nothing in the market that was doing what we proposed to do. So I attached myself to the project, and here we are 10 years later.
So why don't you give us an overview of what the software does, and then we can get into some more detail.
Yeah. So at the highest level, what we do is we built a standardized methodology to be able to bring data in from broker statements for the purposes of running calculations and accounting rules, right? So historically, what we're solving for is a process that was manually driven. I get the statement from my client. I look up a cost base, which is probably incorrect on the statement, and I have to do some sort of continuity and a reconciliation. So historically, that was the challenge. And you think about broker statements, they're all tracking the same data points, but they do it differently. No harmonization or standardization on nomenclature, the way transactions are processed. And then when you begin to add some complexity, like special transactions, or the client has multiple brokers in their lives, it ends up being a very high whip process. I mean, I remember in some of the earliest meetings that we had when we were I was still doing my due diligence, I was taken aside by a partner at a large firm, and he said, "You haven't solved it, but if you actually do this is a really big problem in the industry." So it took us 4 years to get to product market fit where we were actually doing what we said we did. So automating the investment bookkeeping process. And that's what we do today. So any broker statement, we ingest the data, prepare it for mathematical calculations. And the way we've digitally transformed the process is really to convert the user into a manager of exceptions, which we display along the way. So if there's something to address in the process, the user will be able to do it. And then most importantly, to signal to the accountants that we know what they're doing we produce a set of schedules which match what they currently have produced historically manually, right? So our outputs look the same as the schedules that were historically done.
So if we look at a typical scenario, a December year end, right? So we're still talking calendar, which will match the slips and the annual reporting that the brokers do. So if we take the standard reports that a broker will issue for the year, the capital gains and of course all the slips and the summaries that go along with them, etc. What deficiencies have you found that are in there that are significant, that if we just relied on those statements, we'll be building into our own files?
Yeah. So, first of all, when you're holding the assets personally, it's not as important or as relevant, let's say, in terms of the reconciliations. So relying on the summaries provided by the brokers is typically what's done. When the assets are sitting in a holding company, a trust, or some sort of corporation, reporting is very important from a transactional perspective. Often costs are not correct on the statement. So if you're dealing with a situation where the clients move from broker to broker, that's one aspect of it. If the same client might have multiple brokers in their lives, so now you're starting to put summaries together from multiple brokers. Maybe if the costs are not correct, so you begin to lose time in the workflow of the process. So where we fit is really when you're not going to rely on the broker summaries, because you know that the reporting is not that accurate. So that's how I would say we where we find ourselves.
What about foreign exchange? How do you handle the foreign exchange part of this? Like, is this automatically converted on your end, or walk us through that?
Yeah. So on setup, first of all, so last month, previous fiscal year, to be very granular about it, you want to establish cost in our application. So typically you have those costs in Canadian and US.
Yeah.
So we have a very simplified process that when you're creating an entity in Artiffex, your step one is going to load last month, previous fiscal year. You're going to check a box that says, this is my opening statement. Then we're going to present you with a screen where you can input those values in Canadian and US, including if you have the historical FX rate. So if the client bought Apple in 2004, you can actually apply it to the opening value in there. And then from there, we're going to use the FX rate on the date of the transaction. Right. So we're always conscious of that, right? Because we're performing accounting. At the end of the day, we have to be able to process any activity against a public market asset in two currencies against the historical book cost. That's what we bring, the efficiency that we bring, that people, if you're not using Artiffex, you're doing that manually.
Now, you mentioned about a reconciliation on a calendar year basis, but what about off calendar?
Yeah.
How
He gave me the softball and the calendar. That's the easy ones where they're definitely going to rely on
Just easing you into this.
Well, he's shy, obviously.
A little bit, just a tiny bit. But yeah, certainly for Jonathan, for the non-calendar year ends, we fit even more. But we do follow your workflow. So for a non-calendar year, if you're doing it manually, you're going to take what happened with the slips, apply it to what you know took place, and then estimate for the year ahead. We follow that workflow along as you do it. And certainly when the slips come out, we have tools to go back. It's one of the things I learned early on in my journey to understand accountants is this word adjustment is very important. I need to be able to adjust any data point at any point in time for any reason. And then the next thing I have to tell accountants, and by the way, there's an audit trail in the application. So in case you need to see who adjusted it from what to what and why they did it, we track that in the application.
So one area that's always an issue in accounting for this is distributions from mutual funds and ETFs, right? Because you'll get $1 distribution reinvested or cash during the year. And then you get to the end of the year, and until the end of March, when the T3 slips come out, you have no idea what that distribution consisted of. Interest, dividends, capital gains, return on capital. So if you're doing an off-calendar year-end, generally, at least the way I do it, is any distributions in the year from January to whatever my year-end happens to be, I'll accumulate that and defer it,
Yeah, I do the same.
right?
Yeah.
On the
Until it
balance
flips,
sheet,
and then you reconcile.
and then the next year you pick up that income, because otherwise there's no way to do the tax return.
Yeah.
So how do you handle that, and the adjustment to the cost base as well?
So again, our mission was, once we solved for the difficult part, which is bringing the data into the application, so getting rid of the manual piece, right? Our mission, and it took us a few years to get there, was to mirror the workflow of the accountant. So early on, accountants were excited to work with us, since no one was actually bringing this type of efficiency. So we understood, as you explained your process, that we would have to mirror that in the context of our application. So for us, if you keep, some accountants keep everything in the dividend column before the slips come out, or in the distribution column. We pick it up the way it's presented on the statement. So whatever the statement says, we do.
Okay.
But then along the way, we also learned that if a broker changes the book cost without providing a corresponding transaction, we have to do what you do, which is nothing. Right? You can't change cost if you don't debit in the credit, right? We talked about that off camera. So we have built those rules, those accounting, those bookkeeping rules into the application. And then we have tools to make adjustments. So when the slip comes out, most importantly, return of capital can be adjusted for. And then all of the other categories can be segregated inside the application, generate a new set of schedules.
So do you, so if I go through that process, you capture all the information based on the rules I give you. Here's how I handle it, for example, versus how Ivan may handle the same scenario. I take it from you, Guy, that the platform's flexible enough to say, okay, well, you treat it as deferred revenue, I treat it as something else. So we're kind of customizing to our practice. Is that right?
There is an aspect of that. So I'll say that's where I'll sort of articulate that we have two service lines.
Okay.
We have a SaaS and a managed service, right? So on the SaaS side, it's going to be someone who's an expert in investment bookkeeping, who's going to be doing the work and can track it the way they want in the application. So if they work for a partner that wants it tracked one way versus a partner that wants it tracked another way, it's easy to do inside the application. On the managed services side, again, some of our clients indicate that they want things treated differently, so we're able to accommodate that. So for each entity that we support on that side, we have a very comprehensive workflow, so that we have notes from our clients about how they want us to treat certain aspects of the segregation of the data and the data flow and the outputs that we provide to them.
So it is customizable to
Flexible.
a certain,
Yes, flexible. Yeah. One of the advantages that we had in getting to product market fit is accounting rules are known, right? There's rules there. So by implementing all the rules into the application, we can accommodate for virtually any situation that could take place in the context of a reconciliation. So of course, you have to be able to color outside the lines sometimes. So accountants do come back to us as, I have a preference for seeing the data this way. So yes, it's very flexible in that capacity as well.
and for somebody who is subscribed, if are any of these changes that we're talking about, am I able to do any of that myself, or do we need to go through you guys to make the change? Are there any are there any features that I can pick and choose within the software myself, or do we need you guys to do that customization or?
Yeah, so I think I understand the question. So if I don't, just help me refine. I'm not sure.
I think there's two options that you could use this platform for, right? You do it yourself. I think that's the services.
This software as a service.
Software versus SaaS. Yes, and I always get my acronyms screwed up. So
It's SA, not
that's
A.
yeah. Okay. So then that's where you would be using that and generating. They're using their platform to generate your output. Where then you talk about management position.
So how I would
And which do you find firms go more for one than the other, or
that's
is
a good question.
is it
Yeah.
a mix?
So I'm going to answer him, then I'm going to answer that in terms of, and I'll try to do it as quickly as possible. So on the outputs themselves, you can adjust the way the data is segregated. So if you prefer to see things in different columns, I'm giving you a schedule that resembles your schedule. So you have the flexibility to make those changes. The only thing is, if you're using our managed services and we do the file for you in the following year, you have to give us your new any changes that you made so we can make the updates inside the application, right? Excel is a one-way trip out, as I like to say, right? When we launched the company, we only went to market as a SaaS business. And I recall very early on in 2017, one of my first SaaS customers called me into a meeting here in Toronto. And I was sure I was getting fired. It's like one of those conversations where, Guy, we can't figure. And he sat with me very thoughtfully, and I won't name the firm, but he sat with me because, it's very clear that you're onto something, but we can't figure it out. What if you do the work for us? And I had no idea, outsourcing, managed services, it was not really what I wanted to do. What I realized fairly quickly is, we were not at product market fit yet. So that took a few years. So I was glad I was being given another chance, and we knew how to manipulate the system so that it provided the outputs that we would want. And then I started slowly, informally marketing managed services to the world. And for 3-4 years in a row, that side of my business grew by 300% annually, 200 to 300% annually. So I realized that there was a real opportunity for firms that, at the end of the day, accountants went to school to become accountants, not necessarily to adopt software, right? So, and I would say it's probably one of the last professions to be disrupted by technology.
It doesn't surprise me
because of who you are, right? Yeah. I need to see what's going on inside the black box, right? I need to see that the math works. And so, it took us some time, but today managed services is half our business.
Wow. So it is 50-50.
It's 50-50. And Jonathan, I when I first started marketing it in a formal way, I had a hypothesis. I said, firms that have 50 or 60 of these, they're absolutely going to want to bring it in-house and do it themselves. Our clients are giving us 400 and 500 entities to reconcile for them. So this part of that engagement with the client, they don't want to adopt internally. I've got a pricing model that's compelling, right? So it fits their margins. And they can just get all that time back internally, which was not high value, right? So
So take my practice, for example. I've got 5 bookkeepers. They're all doing this. And the question that comes to mind for me, Guy, is, so I've got bookkeepers to do this. Why would I incur an extra cost to do that? That's my first question. And then if we did work together, then would the role of my bookkeeper change where they're now looking at it and checking it? Because I don't want to check it. I don't want to get to that level of detail. That's why I have a bookkeeper. So what are you finding firms doing with?
Yeah. So, I'll start with at the end. One of the comments that we get back from our clients is because we're providing a standard deliverable that always look the same. You have 5 bookkeepers. My guess is each one does things a little bit differently.
No, they don't actually. We have one set form.
Okay.
Yeah.
Fair enough. So, but I do see that in the outside world.
Yeah.
And a lot of the feedback that we get is review time goes down, right? Because in an accounting firm, every time someone touches a file before it goes to the customer, it adds costs, right? So review time should go down. When you're talking about the efficiency that we can deliver on my side, and then when you connect that to the pricing model that I'm providing you, it's very difficult for you to tell me that someone who's going to spend 40 hours on a file internally, what I'm going to deliver to you at the price I'm going to give it to you is not going to beat that.
Okay.
Right?
Is there an ideal number of transactions, for example, where, like my practice, we've got people with 1 or 2 investment accounts and maybe not a lot of activity? Is that one where we just say, all right, that's not a fit?
Probably.
Yeah. Okay.
Yeah. I would say that, for us, there's 2 aspects to, complexity or to use case, let's say. So for sure, more accounts and more transactions versus somebody doing it on the inside we're going to be much faster. So in that example, I'd say to you, the difference for us to process, 200 transactions versus 500 transactions in a fiscal year is minutes.
Yeah.
On your side, we've done the back of the napkin calculations, a transaction from end to end, and you might tell me it is or isn't the case at your firm.
Yeah.
And I'm going to say all of it from inputting it to review, presenting a schedule is 2 to 3 minutes, right? So if you've got another 100 transactions or 200 transactions to do in the fiscal year, you're an accountant, you can do the math, right? And last year we introduced, because we'd gotten to some strong efficiency in the application, on the application side, we introduced a flat fee service model to the marketplace, which is very compelling in the sense that up to a certain number of broker accounts and up to a certain number of transactions which fit into that bell curve, most files, it's a flat fee, right? So there's no surprises, it's predictable. So, you give me those files and we're going to do them. But yes, files with, 10 or 15 transactions over the course of the year with one Canadian account.
Yeah.
You don't need me for that.
Can I just ask one other
Another one?
Another
Okay, you go ahead.
Okay.
Do you either
T1130. I'll forget them. I'll forget my question. Okay, go ahead.
No.
T1135 reporting. Is that part of this as well?
Automated.
Automated.
T1135 we generate automatically. Of course, there is a security classification that needs to take place in our side, and we need to watch that because sometimes firms move their head office from one country to another. So we do report on that accurately. But that's generated automatically. And as well, since we're talking about T1135s, we also have the tax prep, which is widely used in the industry, the exports in Excel that are directly imported into tax prep, the 3 schedules, which includes the T1135.
Okay. That's very interesting.
Now?
No, go ahead. You're good.
Okay. Now, so actually, you brought up a good question because the T1135 reporting from the brokers, often you'll get a category called other, and you'll have a whole list of securities under that. And then we've got to go in and Google each one and see where it is. And then you always end up with, they're always China or Hong Kong or Switzerland or Denmark or, and you've got to add that. So in your report, you're not going to have other. We
will classify it. Yes.
You will specifically classify. Okay. So that's an interesting add-on. Yeah. So let's go back to the exceptions that you said are going to be flagged. So what kind of transactions would typically fall under an exception that you would highlight and then that we would have to go in and adjust?
Yeah. So I would reframe that a little bit in terms of the exceptions. What we're trying to ensure during a periodic reconciliation is continuity to a final schedule that has no discrepancies in it, right? You want to be able to see something that is balanced. So when I talk about exceptions, we talk about, if cash continuity doesn't line up between 2 periods, opening and closing cash balance. I use my hands because when I'm doing a demo, I say opening and closing cash balance. If it doesn't line up, then we flag that in the context of the reconciliation because we're actually reverse engineering the math on the transaction file to check cash continuity between 2 periods. So that's something we would flag. The other thing we'll flag as an example is if from month to month we see something new. So the broker decides for whatever reason to make a name change. And when I say name change, I don't mean Google and Alphabet. I mean, last month it's Apple, this month it's Apple.com. For whatever reason on the statement. We, again, the human in the loop or the computer will say, okay, I didn't see this last month. I see it this month. How do you want me to treat it? Right? If it's actually a new security, it's a new security that wasn't there last month. We're going to assign cost in whatever currency it's in. If it's a name change, then we have to make sure there's continuity between the old name and the new name. So these are some kind of examples that we're ensuring continuity in the periodic reconciliation, because our mission is really to get to at the end a zero discrepancy situation.
Right. So let me throw a couple of types of transactions at you and tell me if you do them or
try.
Okay. What about option trading?
Yeah. So, option trading is something we handle. We have the CRA's approved method for options reconciliation. There's the short and the long method. We follow the short method. in terms of in our application. The way we handle it, like specifically at the application level, is that when you begin a new entity in our application, in our data ingestion window, there's an option to tick a box that said options trading. So you'll actually tick a box, and then we'll apply a rule set designed to reconcile options properly.
Okay. So if somebody is or short selling, I guess would sort of fall along the same thing. So any short positions at the end of a period will be properly
Exactly.
reflected, and when they close the transaction, it'll pick it up as appropriate.
Exactly.
Okay.
Are you doing anything on cryptocurrency now?
So that's a great question, Jonathan. And I would say to your user community, you know, we're excited to be able to add crypto. We've dipped our toe in it. Our struggle with crypto is, for us, we need a static data source to be able to.
That's the problem.
So that's the challenge. Can we, if we had a repeatable statement that was generated every month and looked the same, we could map it to our application. We could apply our rule set to it, and we will be able to do it. So
Yeah, that's everybody's problem.
yeah, right.
Now the whole system is driven by scanning the monthly statements, and then your system reads it and does the work on it. What do any brokers offer the ability to import data, or for them to export it into a format that you can then
A CSV
import?
or something like that?
Yeah.
Yeah, we don't want that format.
You don't?
The reason we work off the statements is because the statements are the book of records from a tax compliance perspective. No CRA is going to say, send me a CSV file or give me the download from the website. The statement remains the book of records for tax compliance, and therefore all of our intellectual property, our rules are based off a reconciliation of the statements. Now, in French, I'll say "j'ouvre une parenthèse," as I like to say, kind of a sidebar, is because our roots are, you know, our parent company Index Systems started building a portfolio management tool in 1999, right? So their expertise is data aggregation, normalization, reconciliation of all financial data that occurs public market, and obviously all alternative investments and private. But to stick to the statement thing, early on in our go-to-market strategy and our journey to product market fit, we thought we could use the feeds because Index already had this expertise. So we faced two challenges. Challenge number one is, if you're a broker and you have $5 million of your friends' money under management, and you want to use a platform, in this particular case called Index Systems, to do the work, doesn't matter which custodian out there, they have to feed the data to the application so you could do your work, right? It's a law. Whereas if you are a client of an accounting firm and you have 50 million at a custodian, and the accounting firm says, feed us the data for this client's 50 million, custodians say no. So we faced a lot of friction in being able to aggregate data directly from the feeds.
Why did they say that? Because of that issue?
They just said no. They don't want to do it. That right? Portfolio management, they have no choice. Accounting firm, you have statements. Get them off the website. So they said no. And then what we discovered, which is one of the things that keeps us in business today, is that when we look at transactional data across the three data sources, so a feed coming in directly from the custodian, a website, I can look at my transactions on any given day, I can see what happened, and the statement, we see variance. Settlement process, trade date varies, FX rates vary. The way transactions are coded in a feed versus a statement also vary. Right? So we see a lot of that variance, right? And then there's the added complexity. The custodian won't even tag a transaction in the way you want to see it, right? They're going to put the word dividend in the activity column, but in the third line of the description, it's going to say reinvestment. It's not going to say that in the feed because the broker doesn't care how to pick it up that way, so he won't code it that. It doesn't end up that way on the statement, right? So from an accounting perspective, all of that on the statement becomes the last word on how to process the data for tax compliance.
Interesting.
Yeah. So no, I no accounting background. You asked me that question before. But do I sound like I know a little something about investment?
You're dropping all the keywords.
Yeah.
If people want to see an example of the report on your website, or how would they?
You could see a snippet of it on our website, but they get in touch with us. info@artiffex.com will absolutely bring them a very quick response for a demo and what we do.
One of the things I'm running into a lot now is because my client base is very fee sensitive around investment. They're doing a lot of investment managing themselves. So Wealthsimple and those platforms where they're pushing the work onto us because
Fee sensitive.
fee sensitive. You don't like fee sensitive?
No, cheap.
Okay, so they're cheap.
Okay.
Okay.
Yes.
So,
Rich people stay rich because they're cheap.
Yeah.
FYI. But go ahead with your question.
so I can't remember my question now because you were talking about Wealthsimple and those discount platforms.
Yeah.
So, and they're drawn to that, not realizing that the cost of accounting for those transactions, because they just look at the discount brokerage fees and they say, okay, that's it for me. But then, we end up having to incur the cost to do the T1135, do the accounting for this.
You're a great customer for us, Jonathan, and that's for those files. We see a lot of that on the files which are self-managed, direct investing, all those discount brokers. We certainly see a lot of activity on that front, whether it's in SaaS or managed services, because of all the extra work that's involved. The reporting is not as good.
Yeah,
So,
yeah, no, absolutely.
So here's one for you.
okay.
Interactive brokers.
Yes.
Have you seen their statements?
Yes.
Impossible to follow.
What is interactive?
You've never interactive broker is an online brokered service, but it's very sophisticated in terms of the type of transactions you can use, multi-currency accounts.
Wow.
But the reporting from them is, from my perspective as an accountant, is the absolute worst I have ever seen from any brokerage firm. You get a month-end statement, right? You don't even see the names of the companies. You get the ticker symbols, right? So you got to look them up. You got to, if you need it for whatever, you got to look them up. The level of detail it goes into from an investment point of view is tremendous. They've got mark-to-market things, unrealized gains, losses, different types of transaction summaries, etc. So from an investor's point of view, I think, they're giving you all kinds of information that would be really good for you. From an accountant's point of view,
it's a disaster.
It's horrible. So, and it doesn't follow in any way the same format that a typical monthly broker statement would be, where you get, you start your overview, then you get your holdings, then you get your monthly transactions, code, with dividend, interest, however it is, right? They're all pretty much the same. This thing is nothing. And I'm starting to see more and more clients switch to it. So
yeah,
what do you do?
I would tell you that interactive brokers fits into the list of custodians that we struggle with for the reasons that you mentioned. They do things on the statement which is counterintuitive from an accounting perspective. They'll split transactions across two currencies in terms of the way they report. We did do some work for clients. Often they'll come to us because, the additional layer of complexity of interactive brokers is typically the clients are doing a lot of trading. So now you have a massive transaction count as well as the complexity of being able to account for it. So they fit into what I would consider to be kind of a smaller group of brokers that maybe not the best use case for us because of the way they report. Jaroslawski Fraser fits into that universe. Questrade as well fits into that universe, where Questrade is a bit easier to deal with in our application, but people are going to those guys for specific reasons.
And Like what reasons are they going to?
Well, Questrade's options trading.
Okay.
There's a lot of options
Okay.
there.
Yeah.
And when we talk about options trading, some people trade options, but then other people trade options as a strategy. So they might do, the most egregious case and why we built our tool in the first place is we had a family office, a client where the patriarch was doing 5,000 transactions a month.
Wow.
So, this was designed as a strategy.
Right.
From an accounting perspective, I understood it to be to minimize the tax exposure on the estate after the death of so on and so forth. So typically those people who are using those tools have a strategy, and the transaction count is quite egregious, way beyond normal. And it's often self-directed, right? In those cases. So I would say interactive brokers, we don't love them. So where we do thrive with interactive brokers is you can actually design your own statements, right? When you ask for your monthly statements from the online investment portal. And so one of the challenges that we have is that people don't do that. So it spits out a kind of a different looking statement every month. And one of our strengths is it's got to be repeatable. Like we design a methodology to support RBCDS, which is different than PHNN, which is different than Scotia, that rounds up all their market and book total to no decimal points.
Yes.
And the transactions but we can write rules for that. So there we can, so where the statement is, repeatable, and we're working on solutions even to deal with stuff like that. AI is gonna help a lot with that in terms of writing the rules and being able to. When I say AI, I don't mean we can go on an AI jack, but I don't mean like sort of external tools. I mean, we've been around for 25 years. Whether our roots are in wealth management, that's Index, us 10 years. We have millions and billions of lines of code, large language models, machine learning built in. And what is AI? Big data. We used to call it big data. It's a similar fast processing of large data sets. We're getting better and better at that. So I hope that this coming year, interactive brokers becomes less of a challenge for us along with the others. Yeah.
I hope so too.
What about security?
Yeah.
What about security around this data?
Yeah, so that's a question everybody asks. Yeah. So again, our parent company, Index Systems, our application is hosted on a private cloud, so we don't. It's not replicated to the United States. We're SOC 2
Here in Canada.
Yes, I'm SOC 2 Type 1 compliant for right now, but the biggest line item in our budgets every year is, so your data is encrypted at rest, it's encrypted at transit. We work with an external security consultant for the last 15 years that is in our lives every month. We have experts as system administrators, so whose jobs are to watch the network and make sure everything stays secure. We're dealing with financial data, and we have some pretty, luckily, we work with clients across Canada. There's some high net worth individuals that have very public profiles. So we're always deeply concerned about privacy and making sure the data stays secure. So
what about foreign brokerage accounts? Well, mainly US, let's say.
Yeah.
Can you handle that as well?
Absolutely. So I talk about it. Sorry, yeah, go ahead.
I was going to say, as a reporting, often the reporting is similar, but different enough, from the Canadian type statement. So how do you deal with that?
Do you mean a Canadian that needs to report on U.S.?
No, I mean an actual U.S.-based broker account, a Merrill Lynch account, or something like that. You can...
but as a Canadian resident.
As a Canadian resident.
Sure, we convert, we support Merrill Lynch, Schwab, all of the custodians, JP Morgan, Goldman Sachs. We support all of them. So that's not an issue for us whatsoever.
Okay.
Yeah.
This is very interesting. I came into this conversation thinking, I don't know why I would look at doing this but I think it's scalability for me, not having to add a person because this is very labor intensive on some of our files.
No question.
This is making me think maybe on certain files this would work well. I guess for me, I think either I would do all of my files this way, or we would just keep doing what we're doing instead of thinking, well, maybe we're going to parse some of these out, right? And so for the simpler ones, we'll just continue to do them in-house. And for the more complicated ones, then maybe that is a a good option. Roughly in terms of pricing, how do you handle pricing?
Yeah. So I'll address the first part in what we see historically, and it's the accountant mentality a little bit. I'm going to try before I really go all in. And I see it in my data, right? A firm that gave us a couple of files one year typically goes much deeper the following year. I see it in our revenue per client basis that's a client profile type for accountants. So we welcome the opportunity to do some files for you and see how you felt about the value this year. As far as pricing, at the beginning of 2025, we introduced a flat fee pricing structure into the market. So, and it has a certain elements, as I was describing it this morning, as like ordering a Happy Meal in a way, if you remember that. But so, our flat fee model, up to 4 broker accounts, 1,000 transactions, and 1 report. So if you need a 1 fiscal year report, we charge $599 for that.
Okay.
Right. If there's a couple more broker accounts and more transactions, there's some additional fees, but they're nominal by comparison to, when you look at a client profile on your side, you have broker accounts, you have transactions. Typically, there's more assets under management, so the fees kind of line up with that. We're flexible, so if you choose a monthly or a quarterly billing cycle, again, the $599 goes up marginally to address those additional frequency of reporting. So we really are able to adapt to the way your reporting requirements are. And that might be a mix on your side, right? You may say, these 5 clients I want 1 fiscal year, these 8 clients I need quarterly reporting, and for the rest I want monthly reporting.
What's the turnaround?
Go ahead.
Sorry. This is a great comment. I got your attention, guys.
What's the turnaround time?
So if we're doing managed services, because turnaround SaaS, it's whenever you want to log into the application, right? So that's you can work in the application. Right now, we say 10 days out from when you give us a file. We're constantly working to shorten that cycle. And, at this time of the year, it's a little bit more difficult to shorten the cycle, whereas other times of the year, it's easier. But we have capacity, and that side of my business is growing. So if you come to me and say, Guy, you know what, I actually need this file in 2 days from now, 100% of the time I can say yes to that. So as long as you're a little flexible there. And the way we try to do it is in year 1, you may give us a couple of files and you're sort of acclimatizing to what we do. In year 2, you're going to want to go all in. The reality is 75% of your client files are going to be calendar year end. So we're going to start communicating with you in September, October to say, can you give us year to date so we can get your files going on our side? So if that fits into your workflow, we can do it so that in December or in January, when the December statement comes out, typically like in this month, we're delivering hundreds and hundreds of calendar year end files to our managed services client.
You talked about the integration with tax prep. Is that the only tax preparation software? Like, what if somebody uses Cantax?
We don't integrate with Cantax. I'd be happy to do it.
Okay.
We haven't. Our next integration will be with Tax Cycle.
Okay.
Because that seems to be the other bigger player in the market.
Okay.
But we can add others. We have an API with QBO and Xero. So downstream you can post.
What about with Caseware?
We have the Caseware templates.
Okay. So
in our application, you'll generate the schedule that needs to go into Caseware, and Excel is the bridge.
Okay. So because for me, the one thing I'm thinking about, this is how I'm thinking your system works, is when I'm reviewing a file, when I look at my investment schedule, I go right to the bottom of that investment schedule because it tells me if there's a discrepancy between the balance and the trial balance versus the schedule itself. And if there is, then we know we have a problem. So I skip past all the detail. Does your platform have a way of pulling, or if we, like, I'm trying to think in terms of an automated process because that's what we're dealing with right now. It's automated. So it reads between the value on that investment statement, that reconciliation we do, and what's in the GL. Do you know if your app can do that, or if there's a way of doing that to automate it?
So again, I think I understand the question from an accounting technicality perspective. So we don't deliver any reports on the managed service side that have discrepancies. So we reconcile to zero discrepancy unless there's actually a problem in the data, and there could be. So there could be missing transactions. We find them all the time in terms of that, the way that works.
So how do you get the message out to the world about your software?
Yeah. So the way we try to find all the best ways to get the attention of accountants. And so some of the methods are Pivot Magazine. That's one place where we every year we're in every issue of Pivot. So for the last few years, and we get a lot of calls from Pivot. A lot of people still read the magazine, the digital stuff. QBO and Xero. So we go to those trade shows as well. We always have a booth.
We met you at Accountex.
You met us at Accountex. And Accountex has become really, I feel, a phenomenal show for the space, as more and more tools and financial technology is being brought to the accounting segment.
It was our first time. We hadn't been to that before.
And the years I went, the year they introduced the show was like a smattering of booths. And then the following year, I also walked the show and I saw more booths. I said, this is trending. We took a booth, and then we took a booth the year after. And I was really impressed last year with the organization of the show and the number of booths there and the visit, the population of the folks visiting. Impressive. So that's another way. And we're seeking other ways. So if you have any good ideas for us, where accountants hang out, we are, it's 10 years since we started Artiffex, since I started the company, and we're really hitting a nice growth curve right now, an exciting time. We're scaling and trying to get known across the country. So we're excited about the future and helping to continue to serve accountants.
So this has been an enlightening conversation for sure.
Yeah, I thought it was going to be boring.
I did too. I didn't even actually like him when I first met him, but
So are we doing a demo for you now, John?
you might. Yeah. Okay. I'm on for that for sure.
You
Yeah.
were resisting before.
I was, but no, you've got to won me over, Guy.
Flexibility.
So, but very good.
So thanks for joining us for our second episode of the year. We hope you enjoyed it and took away some insights you can apply in supporting your clients. Be sure to subscribe on YouTube or follow the podcast wherever you listen to it so you don't miss what's coming next. And for expert-led PD courses, additional resources, and AJAG updates, head over to ajag.ca and join our email list. Thanks again, Guy, for being here. And thanks for joining us, and we'll see you again soon.
Yeah, thanks for having me. It's been a pleasure.
Take care, everybody. This episode has been brought to you in part by Audit Shield. Audit Shield is a fully managed solution that helps CPAs across Canada recover professional fees when clients face CRA reviews, audits, or investigations. It's optional for your clients, free for your firm, and ensures you don't write off valuable time. Thousands of CPAs already rely on Audit Shield to protect their clients and their bottom line. With CRA scrutiny rising, it's quickly becoming a must-have. Jason, good to see you.
Great to be here, Jonathan.
So, from what you've seen at Audit Shield, how is the CRA's use of AI affecting things?
Well, the usage of AI tools at the CRA are making reviews a lot smarter and certainly more frequent, especially as compared to about a year previous. And they're using their AI-driven data analytics to flag your discrepancies, very simple, unusual patterns, and your high-risk filings when they're doing this all at scale. What's interesting, of course, is that the tools can cross-check thousands of data points in seconds. So even the smallest anomaly is being flagged, whereas in years previous, it may not have even been noticed.
Yeah. And so what's that mean for CPA firms?
Well, simply put, more of your clients are being flagged, even those that have so-called clean records. You could say that the reviews are often more detailed, requiring more extensive supporting documentation. And of course, it's your time. We're certainly seeing an increase in the amount of time spent in having to respond by the CPA to the CRA.
Right. So where's Audit Shield fit in?
Well, simply put, we're your safety net, right? Because we make sure that 100% of your time responding to these disruptions and CRA scrutiny is covered by us. So 100% of your professional fees are covered by Audit Shield.
Yeah, that's important. Jason, how do people get in touch with you?
Well, there's a URL on the screen, and certainly my email address is jason@accountancyinsurance.ca.
Great. Thanks so much, Jason.